Welcome back to the Deep Dive, everyone, and a big hello to all of you tuning in on the One More Bitcoin channel. Today, we are diving headfirst into something pretty transformative, actually. It's called real-world assets, or RWA. Our goal here is to unpack how RWA is, maybe quietly, sparking this financial revolution. We're talking about taking those high-value assets, the ones usually just for the super rich, and making them accessible for everyday investors, like you. This isn't just another crypto fad, it feels much more foundational. A real shift. And for this deep dive, we're drawing heavily on a really insightful piece from the One More Money blog. It's called The New Way of Investing for Everyone, how RWA puts rich people's million-dollar assets in your hands.
It really is a game changer, you're right. And that One More Money blog post nails it. RWA isn't just some flash in the pan. They call it a super bridge, connecting good old traditional finance with this blockchain-powered future. And the growth. It's staggering. The global market for tokenized RWA, it's already blasted past $25 billion. That's as of Q2 2025. And looking ahead, projections are talking, well, anywhere from $1 trillion, maybe up to $18 trillion plus by 2030. That's not just growth. That's, well, it's like rebuilding the plumbing of global finance, blurring those lines between old money and digital money.
Wow, okay, 18 trillion. That's a number that's hard to even wrap your head around. So let's break this down. What exactly is RWA tokenization? Because it sounds powerful, but maybe the idea itself is simpler.
Yeah, exactly. At its core, RWA tokenization is basically taking an asset from the real world, something tangible or even intangible, and creating a digital token for it on a blockchain. Think of that token as like a digital proof of ownership, a claim on the underlying asset. It functions kind of like a digital deed or maybe a share certificate, but it lives on that transparent, unchangeable blockchain ledger. And doing this brings immediate benefits. You get much better liquidity, especially for assets that are hard to sell quickly. It drastically lowers the amount you need to invest, makes ownership clearer, and transactions way faster and cheaper.
Okay, so it's more than just a digital copy. It has real legal standing, real value tied to it. That sounds incredibly useful. What kinds of assets are we actually seeing being tokenized? What's moving into this digital space?
Oh, the range is huge, and it's growing all the time, based on what the One More Money blog points out. On the tangible side, you've got the obvious things like real estate homes, commercial properties, that sort of thing. Commodities, too, like gold, silver, even fine art. Infrastructure projects, I saw examples like green energy charging stations, even farms. And then there's the intangible stuff. So non-physical assets, but with real value. Things like stocks and bonds. U.S. Treasury bonds are a big one. Private equity, investment funds, even things like corporate debts, accounts receivable, and newer things too, like carbon credits or even rights to AI computing power. It's really broad.
That's an incredible variety, from a house to AI power. Wow. But okay, how does this actually work? It sounds complex, putting a piece of real estate on a blockchain. The One More Money blog apparently lays out a pretty clear four-step process. Can you walk us through that? Understanding the how seems key here.
Absolutely. And yeah, the process detailed in the research makes sense when you break it down. It's about bridging that off-chain world to the on-chain world. Step one is asset verification. This is absolutely critical. You have to thoroughly check legally and technically that the asset exists and who actually owns it. So for a building, you're verifying deeds. For a bond, you check the contract itself. You need that rock-solid link, right? Otherwise, the token is meaningless.
Gotcha. So proving it's real and owned correctly first. Makes sense. What's next?
Step two is asset custody. So once it's verified, the actual physical asset or the legal rights to it gets placed with a trusted, regulated third party. It could be a law firm, maybe a bank, a specialized company. They hold it, keep it safe, confirm it's still there. This is important. It shows RWA isn't always about removing trust completely, like some pure DeFi stuff. It's more about linking the blockchain's transparency to a reliable, legally accountable entity off-chain.
Okay, so you have a verified asset held by a trusted party. Then the token comes in.
Exactly. Step three, token issuance. This is where smart contracts come into play. They're used to create the digital tokens on the blockchain. And this is where fractionalization happens, which is super powerful. You take a big, expensive asset, say a $500,000 house, and you can digitally slice it into maybe 5,000 tokens, each worth just $100. Suddenly, owning a piece of that house is possible for way more people.
Yeah, fractionalization. That's the key to accessibility, isn't it? Breaking down those huge price tags.
Precisely. And the final step, step four, is on-chain management and trading. Once those tokens are created or minted, they can be bought, sold, traded, even used as collateral, all directly on the blockchain. Transactions are fast, ownership changes are recorded instantly, publicly. You get this perfect, transparent history.
Okay, this is where it gets really exciting for you, our listener. Why go through all this? What does RWA actually mean for how you might invest? Because the benefits we found outlined in the One More Money blog seem, well, genuinely transformative.
They really are profound. I think the biggest one, the most impactful, is probably the democratization of investment. RWA is basically, like the blog says, tearing down the velvet rope. Assets that were only for the super wealthy club, think luxury real estate, private equity funds, maybe fine art, they're becoming accessible. That fractional ownership example, buying a tiny piece of a multi-million-dollar property for maybe just a few bucks, that's huge for financial inclusion. It lets everyone get a piece of the action.
So you might not need to be an accredited investor with millions anymore to access certain markets. That's a massive change.
It really is. And that accessibility ties into supercharging liquidity. Think about assets like a house. It can take months, right, to sell. Or private equity, your money might be locked up for 10 years. These are valuable but illiquid. Tokenizing them turns them into these small, easily treated units you can buy or sell instantly, 247 on a blockchain. It unlocks so much trapped value.
Yeah, that idea of selling a piece of your house on a Tuesday night is pretty wild.
Exactly. And another key point is stability and value. This is important. Unlike some crypto assets that can be incredibly volatile, RWA tokens are backed by actual real-world things. Assets with tangible value, sometimes generating income. This offers a level of stability that could appeal to a much wider range of investors, people looking for something more anchored. You're buying a piece of something real.
Faster, cheaper deals too, right? Cutting out middlemen.
Absolutely. Faster, cheaper deals. Blockchain runs 24/7. Smart contracts can automate processes, cutting out a lot of the intermediaries, slashing fees. Transactions get faster, cheaper, and enhanced transparency. That shared, unchangeable blockchain ledger means everyone can see the transaction history. Less need for costly reconciliation between different parties.
Okay, that's a really compelling package of benefits. So
Yeah.
if the idea has been around, why is it suddenly exploding now? The One More Money blog points to like a perfect storm, right? 4 big factors coming together.
Yeah, it's definitely a convergence, not just one thing. First, regulatory clarity. This is huge. For a long time, big institutions were hesitant because the rules around digital assets were murky. But that's changing fast. Governments worldwide are stepping up. You've got Europe's MiCA framework, which is pretty comprehensive for crypto. In the U.S., there are initiatives like the Genius Act aiming to encourage innovation. This provides a clearer legal playing field. That regulatory green light gives institutions the confidence they needed.
Right. The legal uncertainty was a major roadblock.
Definitely. Second, and maybe the biggest driver, Wall Street's embrace. Honestly, when giants like BlackRock and JPMorgan jump in, everyone pays attention. BlackRock launched BUIDL, their tokenized fund on Ethereum. It's already got over $2.4 billion in what they call total value locked, or TVL. That's serious capital. JPMorgan's using its Onyx platform to tokenize treasuries and dollar deposits. Fidelity, Citigroup, they're all moving into RWA. These aren't small tests anymore. It signals that the financial elite see blockchain as core infrastructure for the future.
So the suits are definitely in the game now. It's not just a niche tech thing anymore.
Not at all. Third, the blockchain technology itself is just better now, more mature. Blockchains like Ethereum, Solana, Polygon, they're more secure, they can handle more transactions, they're more reliable, and crucially, things like cross-chain tech with projects like Chainlink allows secure communication between the blockchain and real-world data sources. That's essential for managing RWAs.
Okay, so the tech is ready, the regulators are clearer, the big money is moving.
And fourth, explosive market demand. It's coming from both sides. You've got regular investors who are eager to access these better quality, stable assets, and you have companies looking for smarter, cheaper ways to manage their own assets. RWA offers solutions for both. It's a win-win, and that's fueling this incredible growth spurt. The market apparently did jump something like 260% in 2025 alone.
Wow. Okay, so this really feels like a paradigm shift.
Yeah.
The One More Money blog really digs into how this directly impacts investors like you listening. It's not just abstract.
Exactly. The impact on the individual investor is pretty direct and empowering. First, it unlocks elite assets. We keep coming back to this, but it's key. Access to things like U.S. Treasury bonds directly, or a piece of that luxury condo, or maybe shares in a pre-IPO startup. Fractional ownership makes it possible to invest with just a small amount of money.
Which democratizes things massively.
Hugely. Then there's anytime, anywhere, trading. Forget 9 to 5 market hours. Blockchain is global, 24/7. You can trade these tokenized assets from your phone whenever you want, wherever you are. That flexibility is amazing, and it boosts liquidity too, makes it easier to get in and out.
That flexibility is a game changer. Imagine adjusting your portfolio late on a Sunday night.
Right. And it should mean lower costs, big potential. Smart contracts cut out a lot of the middlemen, the fees. Transactions become cheaper. Plus, dividends or income from the asset can often be distributed automatically right to your digital wallet. Less friction, lower costs.
So it's really turning investment from this sort of exclusive privilege into more of an opportunity for everyone.
That's the promise. Removing barriers, capital, geography, time. True democratization.
And this isn't just theoretical, is it? The One More Money blog highlights several areas where RWA is actively being used today. Can you give us some concrete examples?
Oh yeah, it's definitely happening now. It's exciting to see. Probably the most successful area so far is tokenized Treasury bonds and funds, especially U.S. Treasuries, because they're seen as safe and offer decent yields. Platforms like Ondo Finance, for example, let people swap stablecoins for tokenized bonds and earn yield. That market's growing incredibly fast.
Okay, so government debt is going on-chain. What else?
Real estate tokenization. Real estate's a massive multi-trillion-dollar asset class, perfect for this. You have platforms like Realty and Balcony. They're tokenizing properties all over the world. Lets people buy fractions of apartments, office buildings, makes it easier for investors to get exposure, and maybe easier for developers to raise funds, too.
And private equity. That's usually very exclusive.
Right. Tokenizing private equity and venture capital is another area. Financial giants, Fidelity, Citigroup, they're looking at creating on-chain funds. This could eventually allow accredited investors, maybe even retail investors down the line, to get into private deals with smaller amounts of capital than currently required. And then there are all sorts of new and niche assets. This shows the real breadth of RWA. The blog mentioned things like tokenizing revenue streams from green energy projects like EV charging stations or agricultural assets. There was an example of a grape farm in China, even AI computing power being tokenized. It really opens up possibilities for assets that were previously just stuck or hard to value and trade.
That's fascinating. The potential seems almost limitless. But no revolution is smooth sailing, right?
Mm-hmm.
The One More Money blog was also careful to point out challenges and risks. We need to be realistic about those, too.
Absolutely. It's crucial to have a balanced perspective. One major hurdle is compliance and regulation. It's a patchwork globally, right? An asset might be treated as a security in the U.S., something else in Europe, something else in Asia. Navigating that complex legal landscape, especially for assets intended to be traded globally, is a huge challenge. Getting consistent rules is tough.
Yeah, the lawyers must be busy. What about the link to the real world?
That's the off-chain custody risk. The blockchain part might be transparent, but the actual physical asset, the building, the gold bars, whatever, still exists somewhere. It's held by that custodian we talked about. So there's always a risk of, well, mismanagement or even fraud by that off-chain party. Building trust in those custodians and having strong legal protections is absolutely vital. The token's only as good as the asset backing it.
Okay, so counterparty risk, essentially, and liquidity. You said it improves liquidity, but are there still issues?
Yes, market liquidity is still developing. While tokenization helps, especially for very illiquid assets, the secondary markets for many of these tokens are still pretty new, especially for unique assets like a specific piece of art or real estate. Getting consistent pricing and finding buyers quickly might still be challenging compared to, say, stocks. Those markets need to mature, and of course there are always technological and security risks. Smart contracts can have bugs, blockchains can have issues, cross-chain bridges can be vulnerable. Security needs to be absolutely top-notch, requiring constant vigilance and auditing.
Right, so potential pitfalls to watch out for. This RWA revolution is clearly global, though. How are different parts of the world approaching it? Is anyone leading?
Yeah, the One More Money blog paints a picture of a global race, really. The United States is definitely a major hub, especially with big players like BlackRock and JPMorgan driving the tokenization of traditional financial assets. Lots of institutional innovation there. Europe seems very focused on getting the rules right first, guided by their MiCA framework. They're looking closely at bonds, real estate, even carbon credits, but with a strong emphasis on compliance. And then Asia is emerging super fast. Places like Singapore, Hong Kong, the UAE, Dubai, Abu Dhabi, they're really pushing hard to build the infrastructure and pilot projects. They want to be global hubs for digital assets. Interestingly, in mainland China, it seems more policy-driven, focusing on integrating digital tech with the real economy in specific ways, like those examples of tourism tickets or AI power. So different flavors globally.
Fascinating. A truly global shift with regional nuances. Well, this has been an incredibly insightful deep dive. It really feels like RWA isn't just a fleeting trend. It's like we're watching the foundations of a new financial system being built, moving away from those closed-off, sometimes clunky traditional systems towards something more open, transparent, and accessible worldwide.
Couldn't agree more. The vision, as that One More Money blog put it, is really about making assets flow faster, making them easier to get hold of, and distributing them more fairly. It's applying that core blockchain ethos to tangible value. And maybe a final thought for you, our listener, echoing the blog's insight. When everyone understands it, the opportunity is gone. This feels like a moment where paying close attention to RWA, looking for those solid projects building this new infrastructure, it could be really rewarding. There are risks, for sure, we discussed those, but the potential upside seems immense.
That's a great point to end on. Before we wrap up, thank you so much for joining us on this exploration of real-world assets. We know putting together these deep dives on complex topics like crypto, DeFi, Bitcoin investing, it takes effort, so we really appreciate you tuning in and engaging with us. If you want to stay ahead of the curve on developments like RWA and everything else happening in this space, we'd absolutely love it if you'd subscribe to the One More Bitcoin channel. That way you won't miss any future videos. Also, please do hit that like button and drop a comment below. Let us know what you think about RWA. Did this make sense? What are you excited or concerned about? Your feedback genuinely helps us make better content. And just the usual quick reminder, everything we discussed today is for informational purposes only. It's not financial advice. Always do your own research and please consult with a qualified financial professional before making any investment decisions. You can find a full disclaimer at the end of our topic description. Until next time, keep learning, keep exploring, and stay curious.